That rand trading at R6.79, so dropping back below R6.80. And it looks like we have a generally positive environment for the currency at this stage. Rising equity prices and a whole load of other factors helping the rand.
Indeed, yesterday the rand remained firm on the back of rallying commodity prices and increased global risk appetite. Comments by Governor Marcus the day before, backed up by very solid credit data, may also have encouraged rand bulls. We also saw encouraging fiscal data out yesterday, which implies that SA authorities will continue to build up reserves, which together with an expectation of another trade deficit could limit this rand strength. However, if we see PPI numbers coming slightly higher than expected, this could curtail rand weakness. So today's double bill of data could offset each other. We do believe that the rand will remain range bound.
Well, let's maybe touch on that trade data. That's for February. We had a big deficit in January, but that followed a massive surplus back in December. How would you expect to see that deficit for February? As big as January, or perhaps narrowing a little bit?
We expect the deficit to have narrowed, mainly because we don't see exports declining as much as it did in January. We saw exports decline by a massive 17%. We do expect that to have increased somewhat. And as well as the resilience of the domestic market, we expect imports also to improve. So we expect the deficit to have narrowed to about 2.5 billion.
Shireen, producer inflation trended down very nicely to 5.5% in January. Do you think January was the turning point for that producer inflation?
I don't think it was a turning point. I think we could possibly see PPI come in slightly higher again at around about 6%. During the month, we saw higher commodity prices, which could have impacted the mining and quarrying component. We also saw electricity costs increase. So all of that will, in fact, we expect those factors to have increased PPI during the month.
And of course, PMI rounding up a week full of data here in South Africa. That PMI in February, 54.8, has been trending up quite nicely. Do you think we can maintain the momentum there?
I do think the momentum will be maintained. I think we should watch out for the employment index, which increased last month for the first time in 9 months. So that's a number to watch out for. However, we could possibly see some pressure on that number from the prices component, which has been trending upwards.
Talking about employment, we had the ADP jobs report out of the United States last night. 201,000 jobs created this month, slightly shy of forecasts. We're getting non-farm payrolls tomorrow, and that's the big number the market's going to be looking at, isn't it, Shireen?
Indeed, but I don't think we should read too much into that number. That number did disappoint somewhat, and we also saw the unemployment number last month increase to about 9.1% from 9% the previous month. The main increase in the ADP numbers came from the smaller companies, which is about 1 to 49 workers. So that number is a bit of a concern, but I do expect the non-farm payrolls to come in slightly higher than the ADP numbers tomorrow.
Shireen, the rand, now that we've broken down below R6.80, do you think we can maintain that? What's the trend for the rand?
I think it could be maintained. I think it's it's range bound at the moment, so I think we could possibly look at 678 to about 688.